Coming up on this edition of Money in Your Pocket, Mark Swanson from Dimond Brothers Insurance will be here to talk to us about the often confusing world of health insurance and the Affordable Health Care Act. Mark will help us wade through the terms, costs, and misunderstandings about the HCA. He'll also provide us with some advice on what you should look for when choosing a plan and what free services are out there to help you. That's all coming up next, so stay right here.
This program is made possible in part by Credit Union One. Proud to support Money in Your Pocket. Credit Union One offers savings and lending options. Additional information on membership available at creditunion1.org. Loans subject to approval. Accounts are insured up to $250,000. By Members' Choice, this institution is not federally insured.
Welcome back to Money in Your Pocket. I'm your host, Lori Casey, and today we're talking about, well, what's sometimes the confusing world of health insurance with Mark Swanson. Thanks for joining us.
Thank you for having me.
Tell us a little bit about you with Dimond Brothers Insurance. Tell us a little bit about what you do.
Well, my title is Executive Vice President, but I actually have a few different jobs. My main job, based out of DeKalb, Illinois, is to oversee about 17 offices north of I-74. But my side job and a little bit of my passion is trying to help shepherd our entire team with the benefits direction, specifically with the Affordable Care Act.
Okay, well, let's talk about your industry. Health insurance changed a lot with the Affordable Health Care Act. Talk about how that changed.
Yes, it did. The Affordable Care Act, the true name of it is the Patient Protection and Affordable Care Act. A lot of people call it the Affordable Care Act or the ACA. You'll hear the term Obamacare out there as well. And it was a 1,000-page law that was passed in 2010. And it was of the size and scope of a change equal to Medicare and Medicaid. And it impacted pretty much every part of the healthcare field. And it was something that we had to just grapple piece by piece with in order to determine how our clients and prospective clients would handle it. And that's what I've been doing.
So how much of your insurance business prior to this, how much health insurance were you actually selling?
Well, we're a rather large firm, but it was still probably a smaller percentage of our business. It was probably only between 15-20% of our business was the health insurance revenue. But since the implementation, it has been our fastest growing revenue stream, but it's also been something that's probably posed us the most challenges that we've had to face since I've actually probably been with Dimond Brothers. So
are a lot of insurance agents selling health insurance, or is it?
A lot of agents dabble. There are certain agencies that do a very good job and they kind of focus on that. But most agents generally have it as a part of what they offer. What we found in going through this process, especially all the training and the classes that are needed, I would sit in a class with 100 different people, different agents in there, and a good majority of those, 80% of them, were really deciding to either not invest themselves into understanding the law or really backing away from it altogether.
Because it's pretty complicated and time consuming.
Incredibly. We have spent more energy and money trying to understand the law as much as anything. And it's not that the law was just passed and that was it. We had to continually invest in all the changes. A week doesn't go by when there hasn't been some kind of IRS guideline or law change or implementation date that hasn't been changed that we've had to alter ourselves.
Well, I know you do lots of talks about the Affordable Care Act for the public. What are some of the biggest misconceptions or misunderstandings that the public has about it?
Sure. I think the biggest one that we have is the term Obamacare. A lot of people think that the law was passed was a government program in the same sense as a Medicare or Medicaid, where the government is actually paying for people's insurance. That's not the case. Obamacare, the Affordable Care Act, was a series of laws that were passed basically redesigning the rules of how people can buy and sell insurance. The same players, the same companies that offered coverage pre-ACA are mostly the same people that you work with now. That's probably been the number one thing I've had to communicate to some people, that when you still get insurance, you still get it from an insurance company. The Affordable Care Act just provides a new set of rules, and from there's a lot of changes.
So what now how are the penalties working, if you choose not to participate and not get health insurance?
Yeah, there was a staggering series of penalties that were implemented. The law was passed in 2010, but the penalties for an individual, if you did not obtain affordable minimum value coverage, didn't really trigger until 2014. In 2014, it started off with about a 1% of your taxable income penalty. 2015, the year we're in right now, is to 2%, and then it goes up to 2.5 and so on. So it becomes a significant penalty for those people who do not secure coverage.
So then is that meaning more and more people are looking at, well, I could pay for this penalty, or I could pay for insurance and have something? So are more and more people getting on board?
Absolutely. We expect the next open enrollment period, which will happen at the end of this year, to be one of the biggest years out there, partly because some people still are just not aware of the penalties. They haven't had their taxes done, although now they should have. They're starting to get the word from their tax advisor, or if they do it online themselves, that they have this penalty that's out there because they weren't able to prove that they had health insurance. And it's a significant penalty for some people. Some people have been weighing the cost of that penalty versus the cost of getting a health care coverage, but as the penalty increases, it makes less sense not to have a policy when you start paying $800, $900 and $1,000 for nothing, when you could possibly pay a little more and have a decent policy.
So if you're deciding, well, I guess I need to get on board, or maybe I want to change my plan, what advice do you have for people? Because it's complicated.
Yes.
Insurance, it's got all these terms, and where should you even start? What do you recommend?
A couple resources. The first thing I do recommend is people go to healthcare.gov and just look. There is a lot of good information that the government has provided about how the process works. You can get sample quotes. You can take a look at what coverage is available in your area. But before you make a decision, as I counsel everyone, there is help out there. There are navigators that are available at most community centers, and there's lots of agents out there who are also invested and can help you. There's no cost for using these services, so I highly recommend getting some help, especially before you actually choose a plan.
So what factors should you consider, once you kind of go through that? Should you look at price first?
No, I would recommend the first thing to look at, and probably the biggest error that we've tried to help our clients correct, is make sure that the network that you are choosing is something you're comfortable with. As the law is written, there are multiple companies offering multiple different types of plans, and some of the networks are narrow and some are more broad. A lot of people get very passionate about the doctor that they're used to seeing. I would make sure that whatever plan you're choosing, you're comfortable with the network and the doctors that are there. That's probably the biggest error that we've seen from people self-choosing, is picking the wrong doctor, or a network that may only have one or two doctors within a 50-mile radius. That's the first thing. Then you start weighing not just the price, but the value and the deductibles and the co-insurance per your individual situation. If you're a person that has more medical needs, you might need a lower deductible. If you are more of a healthy person, you might look at risking a little bit more with a higher deductible. But those discussions are, again, I think best held with somebody who's familiar with it. Navigator, agent, they can help you out a lot.
Talk a little bit about, we want to talk about some common terms that come up in health insurance. One of them is underwriting, and I know that is something that has changed in recent years.
The first thing, probably the biggest substantial change that happened from the passage of the law in 2010 was the elimination of most underwriting for an individual health policy. In the past, pre-ACA, you could ask a myriad of questions relating to somebody's health. What maladies do you have? What family history do you have? Height, weight, gender. In 2010, they basically said you cannot hold any pre-existing conditions against anyone for the causes of rate. You can only ask three basic questions: how old you are, where you live, and if you use tobacco products. That's it. You cannot ask even somebody's gender any further. But by doing that, what that does is the insurance companies no longer can pick and choose the healthy versus unhealthy to write coverage for. So that was one of the precipitating factors for rates generally having a substantial increase in 2010.
So prior to that, insurance companies could charge more if you had the pre-existing conditions or if you had cancer in your family. Now they can't do that anymore, correct?
They can't. No, it's called community rating, and basically they an insurance company has to give out the rates for man, woman, whatever, for an age and for a zip code and for tobacco use. That's it. So a 45-year-old marathon runner who walks in my office to get coverage is going to get the same coverage as the person who might have a series of medical issues. And that's what the insurance companies have to deal with.
Okay. You hear, maybe it's in social media, in the news, or just anecdotally, people who signed up for affordable health care and they're paying a lot less than they were before. And then you hear people that are paying a tremendous amount more. What's kind of causing that?
It's confusing.
Yeah,
and
it is.
And it's absolutely true. As we tell a lot of our agents, most of our conversations are generally very good or a little challenging. It goes back to this part of eliminating the pre-existing conditions, and the policies that had to be written going forward all had to be what I call supersized. They all had to have 10 essential coverages: maternity, RX and drug coverage, wellness benefits. Those things had to be included in any policy written after 2010 that was affordable through the Affordable Care Act. So the insurance companies had to offer a better policy to everyone, regardless. You couldn't pick and choose the coverages you wanted, and they could not keep the underwriting out. So what happened is that raised rates, and in our experience, it's raised rates generally across the board in the individual market between 200% and 300% for a new policy. So for those people, if that was it, yes, everybody would be very upset about the rate increase, and we still have many people who are upset, rightfully so. However, the other large component of the ACA is they've put in a subsidy mechanism to help people pay for that. Now, it's based on a series of guidelines based on your household income. So what it starts out is basically if you are 400% of the poverty level or less as a family or an individual, you are probably eligible for a subsidy. And those subsidies can be very significant. We have subsidies that go up into the low $20,000 a year mark. And subsidies as low as just a couple $100
How do
a
those
month.
subsidies work, or how are they paid out, or is it discount?
It's an interesting system, and this was another challenge that the ACA has posed. Because people could not afford to wait till their taxes to get that credit back, they have an advance payment mechanism in place. And a lot of it is just based off the trust of the individual. You go onto the system and you attest. You basically say, I feel like my income at the end of this year is going to be X. And if it's under the guidelines that gives you a subsidy, the government will help pay you for your insurance premium just as you would. So imagine an insurance bill that is normally retail price $500 a month. Well, if you're getting a $300 a month subsidy, literally the bill, the amount that you're owed is going to be sent to you, and the other parts can be sent to the government, and you both will pay for that at the same time. At the end of the year, they'll reconcile whether the amount that you attested you would make at the end of the year would be correct, and they'll adjust either way. The first year, I know a major accounting firm has said that most people actually underestimated their income, and that has caused some people some headaches come tax time.
Okay, so if people they're out and they're doing their shopping, for their health insurance, because you can do the open enrollment and pick and choose every year something different. What are some common terms that they may run across that might be a little confusing?
I think the most common term, people don't understand totally what a deductible is.
Okay.
That's the amount that you would pay before certain services are paid by your insurance carrier.
Okay. And I think the key is certain, because some things are automatically
and
covered.
That was another key provision of the Affordable Care Act. Most plans, in fact, all plans that are ACA qualified have to have certain wellness benefits. And that is something that's also not known. It's a misconception out there. You can see your doctor on an annual visit for your normal screenings, for things that the AMA has determined should be regular checkups and visits. You can go see that, and there should be no charge for that. My son was born in 2010, and as many people know, it seems like you bring in your child to the doctor every few months. The law passed in 2010, I did not pay almost anything for my child's, all of his inoculations and visits and so forth, because those were predetermined to be part of the wellness benefit, which is a great perk, and a lot of people don't know that. You can see your doctor every year for physicals. However, there is a fine line when you see your doctor for a physical and then they say there's something wrong and we need to take some blood or we need to take this. Then it converts to an office visit and then your deductible comes into play.
So that deductible is you have to pay that amount before the insurance kicks in.
Absolutely. And you don't have to pay it right most of the time. You don't have to pay that at the time of service. It's just going to be billed through the normal hospital administration system.
So we've got deductible. What else? What other terms are a little confusing?
Coinsurance is probably the most difficult term to explain as well. Coinsurance is an amount that you're basically saying to the plan. You're working a deal with the plan saying, okay, I have my deductible to meet first. But after I meet my deductible, it's not like everything's paid at 100%, unless you have a plan like that. A lot of times the next step is to say, okay, we've met your deductible, and now the plan is going to pay 80%, not 100%. So you're still going to have some bills to pay up to an out-of-pocket maximum. And that was another provision of the law saying there's got to be an endpoint where you stop paying.
Yeah, right.
And the out-of-pocket maximum varies. It increases every year, but it's an amount now set by the government.
Another one that I've seen is copay.
Right. Some plans have copays and some don't. Copay was originally administered to try to discourage people from going to the doctor for every little thing. Some plans have them and some don't. A copay is generally independent of every other kind of charge. You pay it, you lose it, it doesn't generally go toward anything except maybe you're out of pocket. But a lot of plans have gotten rid of copays and some still have them. There are so many choices. In Illinois, I ran my family through it as soon as it ran through, and I had 78 different plan options when I chose it, and probably 50% of those had some copays and some didn't. So there's just a lot of options to choose from.
Another one that I see is you've got a flexible spending account and a health savings account. Are they the same thing?
No, a flexible spending account is different from a health savings account. Health savings accounts are actually very popular these days because generally deductibles have been increasing for years because that's a way to keep costs down. Most people, I highly encourage getting a health savings account because it does two things. One, it's money you put into a bank account. Almost every bank has health savings account options. You put money in there, there's certain limits of how much you can put in there, but it can lower your taxable income. And it's your money. You can save it for medical expenses now and through the years. A flex spending account is a little different in that it's money that's set aside, but it's spent, again, on medical issues, but there are certain provisions where if you have to use it or lose it. And most people generally have one or the other. I am a big fan of the HSA just because it's your money and you can use it, and most everybody will use some medical bills at some point.
Especially as you said, as those deductibles get higher and higher, sometimes it's hard to come up with a couple $1,000s.
Absolutely. If you've got a high deductible plan, but if you can couple that with a health savings account that is fully funded, then your plan becomes a very rich plan. And more importantly, what I like about it is it puts the individual in some level of control and buy-in to the whole process. One of the big issues that the Affordable Care Act really has not done a good job is really talking and explaining the true nature and costs of healthcare in this country. Health costs have gone up substantially over the last many years. And that's the whole reason why a lot of people think we have the Affordable Care Act now.
And what do you say is accounting for healthcare costs and the increase?
There's multiple things, and this starts getting into a political area, and I try to be like Switzerland on these things, but generally part of it is just the cost of healthcare just increases. Medical advances cost money. Drugs that are wonder drugs cost money. There's a profit motive that's involved with a lot of our companies. We're not a not-for-profit in many of these cases. So there's money to be made on that, which increases it. However, there's also a skyrocketing amount of medical malpractice claims out there that impact doctors to maybe potentially have to pay enormous premiums, so they have to charge more. There's also some responsibility on the individual. We are living longer than we ever have. Some people do not live very healthy lifestyles, and that contributes to the cost of healthcare. So it's a myriad of things. I wouldn't want to pick on one particular industry or person, but it's something that has been a significant and serious issue for many years.
Mark, what would you say to people like, say, I don't want to spend more on health insurance, or I don't want to buy health insurance. I never go to the doctor. I'm never sick.
I find that to be the most frustrating conversation I have, especially with the invincibles, the 30 to 40-year-old people who feel like they're never going to get injured. From personal experience, I can tell you that that's probably the most wrong thinking out there. It frustrates me that people will pay $180 for their cell phone bill but won't pay for their health insurance coverage. Without your health, we literally have nothing. And everybody I talk to who's ever had any kind of health issue, everything becomes irrelevant. So even compared to a car bill, or even a house payment, your health is the most important thing you have, and people should understand that costs money. Also, 60% or plus of all bankruptcies that occur in this country occur as a direct relation to a medical bill that came up that could not be paid. It's a devastating financially issue to have to deal with if you've got a medical issue, because the cost of health care can be enormous.
Okay. As people get, maybe they've had their health plan for a year, open enrollment comes up, do you recommend people evaluate their health plan every year and maybe change, or just, it's fine, stay the same?
No, I do encourage every year to look at your options, because carriers vary rates a lot, especially these first few years, because a lot of these carriers, I feel for them, they didn't know how many people would actually come on the plan, so they were kind of shooting in the dark with their rates. We're a few years into this now, so I think they've got the experience to understand, but we also have new players in the market who are trying to come in and be more competitive. So I absolutely, and it's the good thing about this is it doesn't take the 2 or 3 weeks that it used to figure out if you're even qualified. It's a very simple process to find out what your rate is and what your options are. It can take literally 20 minutes. But again, do that homework yourself and then get to a person before choosing a plan to help you with that.
Get some help, as you call them, navigators.
Navigators, agents. For the people who are really smart, they can figure it out themselves, but I'm a smart person, my wife's a smart person, and we've spent some time on this, and it's still confusing.
All right, so let's talk about the future of affordable health care and the health insurance industry, because it's not static and it's going to change. What do you see as some of the things coming down the pike?
Well, there's a few. There's a few legislative issues. A lot of people have heard about the pending Supreme Court case that has serious relevance to Illinois. That case basically involves the fact that a group of people said that the subsidies that were afforded to people throughout many states, Illinois being one of them, was not legal because of the way the law was written. The Supreme Court's heard argument, and we're expecting to have a result of that this summer. That could change everything depending on the outcome of that. But that's just one thing. There are still IRS guidelines that still have to be determined. A Cadillac tax, which a lot of people have been hearing about, comes in 2018.
What is that?
That is a potentially 40% excise tax on employers that offer a very robust coverage plan that costs a lot of money. The articles I've been reading say up to 30% of employer groups could be eligible for this Cadillac tax coming up in several years. And the problem is this is not something you can change overnight. So a lot of our groups are talking to union membership or other members, trying to figure out how to address that correctly.
Okay, so we've got a presidential election coming up. Do you think that's going to impact all this? Will the Affordable Health Care Act go out the door?
I have two minds. My general thinking is that it took 60 years for it to be put in place. It's going to be hard to unwind it. Also, there are so many people who have taken advantage of the Affordable Care Act. I don't know how you put that genie back in that bottle. So that would take not just a elimination of the plan, it'd have to take a replacement. And that would take probably all branches of government being together. So yes, the upcoming election could have significant impacts on how that works, but we're going to need the ideas behind it as well as the political moxie to be able to get that through, which I am more pessimistic getting things accomplished these days, so we'll see.
So it's probably not, it may change, but probably not going away.
Absolutely. That's what we have to go by that as advisors. We have to deal with the law as it's written today. We keep our eyes open for what might be coming in the future, but we have to play by the rules that are in place today and assume that those rules are going to be in place a couple of years from now too.
All right, Mark, you got about 1 minute left. Any last little bit of advice you'd like to share?
Don't stress out, first of all. Get the help that you need. I think the biggest thing that you need to understand, or if I was talking to the general public, would be that there is a lot of help out there, and that there's a lot of political rhetoric on both sides of this, and I've definitely fallen in the middle of the whole plan. Look at all of your options and the provisions and the subsidies with open eyes and talk to somebody who's been dealing with it for some time, and I think you'll get a nice, clear path to the right answer for you.
All right, Mark, thanks so much for coming by Money in Your Pocket and helping us kind of wade through the confusion of healthcare.
You're welcome.
What's the bottom line for health insurance? Mark offers these points to remember. Number 1, get help. Choosing a health care plan can be daunting. There are navigators out there that will offer free assistance, so check in your local community for services in your area. Number 2, be aware that health insurance is costly, but not having it can cost you more, either in penalties or if you incur significant medical bills. Number 3, weigh your options in the marketplace. Don't look at price only. Mark says the most important factor should be the network. You probably want to see a medical provider in your area, so make sure you look at network carefully. And finally, explore your options. The once-a-year open enrollment period lets you change plans, which is beneficial if you foresee your healthcare situation changing. Well, that's all the time we have for this edition of Money in Your Pocket. Thanks for tuning in, and we'll see you next time.
This program is made possible in part by Credit Union One. Proud to support Money in Your Pocket. Credit Union One offers savings and lending options. Additional information on membership available at creditunion1.org. Loans subject to approval. Accounts are insured up to $250,000. By Members' Choice, this institution is not federally insured.